anywhere you are in the world. Let me know where you're watching from. All right, use the comment section to drop uh, let me know where you're watching from. Awesome, awesome. If you're just joining this call, let me know where you're watching from. If you are just joining this call, let me know where you're watching from. Okay, let me know where you're watching from. Let me know where you are watching from. Okay, where are you watching from? All right, trying to bring up our slides. Okay, I can see Forex trigger from India. I can see
Right.
Joshua from
Slides.
Badagry, Bega, Lagos. Okay, I can see Isoto from Port Harcourt. Okay, awesome, 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 awesome. I can see. Okay, so you're welcome to today's session. Today's session, we'll be looking at a very important subject for beginners, okay, in the space. Okay, a minute. All right. Thank you for joining. Thank you for joining. I can see Popo from Pakistan. You're welcome. I can see Joshua from Abuja. If you are here, you can also bring in your friends. You can also invite your friends. Let them know about this. This is very important. Let them know about this session. Let your friends know about this session. It's very, very important. Okay. So today we'll be looking at okay, let me bring up my slides. Sorry, let me bring up my slides here so we can follow. Okay. So today we'll be looking at Forex for beginners. All right. For those who are just starting out with Forex trading, this session is for you. So you want to pay rapt attention. You want to pay rapt attention. Okay. Okay, sorry, I'm having a little technical issue bringing up my slides. Okay. I believe we are ready. I can see Nathan. Nathan said nice to be here. You're welcome, Nathan. You're welcome. Okay, so today we are having an introduction to Forex. Most importantly, this session is to help you as a newbie in the space to have a grasp of the foundational knowledge needed for you to scale through in the Forex trading space. All right. So, most importantly, I'll need to understand that this session is strictly for educational purpose only. This session is to enlighten you. This session is to educate you on the needed, okay, to be able to go through in the Forex trading space. All right. And I believe that one of those things that you need to scale in the Forex trading space is the the knowledge of Forex itself. All right, the knowledge of Forex itself is very much needed. All right. So while we are at it, Forex in its short form is called foreign exchange. All right, foreign exchange. So the prefix from the foreign, all right, and the prefix from the exchange was brought together, to give us what is called Forex. All right. So now foreign exchange has to do with the foreign exchange of currencies. Okay? Foreign exchange of currencies. Now, one important thing you need to know as a Forex trader or as a potential Forex trader is that you need to seek knowledge first. And I am glad that you are here. So, any opinion, news research, prices, analysis, or any other information discussed in this webinar or is linked to this presentation is provided as a general market commentary and do not constitute investment advice. So it's important that you have this at the back of your mind. Okay? Then we have a special package for all participants on this webinar. This is very important, and this opportunity goes to everyone watching this. All right. Number one, you have a 100% deposit bonus. After attending these lessons, use the promo code for a 100% deposit bonus. You get double your deposit and you maximize your profit potential. All right. I will share the promo code at the end of the session. Don't miss it. You want to have it, you want to participate in this opportunity. Number two, this is very rare. You don't see this outside. You don't see this anywhere else. Certificate of attendance, and this is to certify that you have participated in these webinars and learned the lessons shared in the course of this webinar. So this certificate of attendance is to attest to your presence at this webinar. Number three, you will get a trader's guidebook in PDF. All participants on this webinar would get it. It's important that you would get a follow-up mail once this webinar is over. The PDF will be sent to you. This package is something you will not get elsewhere. So take advantage on it, and let's have a deep dive into the course of today's conversation. Okay, so my name is Tunmise Olaoluwa, and I'm a professional Forex trader with 7 years experience in the space. I'm also an independent trader and trainer, and a trader with a focus on price action trading strategy, provides signal based on price actions only. Now, what is the content of our conversation today? I will be talking about what Forex is, what is traded in the Forex market, who is a Forex broker, the trading platforms, currency pairs, bid and ask price. We'll talk about spread, we'll talk about lot size, we'll talk about pips and points, and also we'll talk about how to create a demo account with OctaFX. Okay, I believe you are following. Okay. Now, the first question is, what is Forex? What is Forex? This is a very important question. So, Forex, like I said, is a short form of foreign exchange. And the foreign exchange market, which is also known as Forex, okay, or FX, is the largest financial market in the world. The largest financial market in the world. And this is because this is because it's the largest financial market in the world, and this is because it has over 7.5 trillion trading volume, daily liquidity, which means daily what revolves, what moves around the market is 7.5 trillion. That is a lot of liquidity. All right, so the forex market is not a market where there is demand and no supply, or there is supply and no demand. All right, it's always moving. There is constant volume flowing in and out, and on a daily basis we have an average 7.5 trillion dollars, and that's a lot of money right there. The forex market is a global market. It's a decentralized market where the world's currency changes hand. Money moves from the hand of one person to the other. That is how the financial market plays, and that is where the forex market plays. The forex market is global, it's decentralized. All right? It is where money changes hand from one individual to another individual. Now, what is traded in the forex market? Currencies are traded, commodities are traded, cryptocurrencies are traded. So when we talk about currencies, what falls into that category? We have the euro, we have the pounds, we have the dollar, we have the Japanese yen, we have the Swiss franc that falls into that category. Let's talk about commodities. What are the commodities that are traded in the financial market? We have gold, we have silver, and we have oil being traded in the forex market. We also have cryptocurrency, which is the newest one in the space now, and cryptocurrencies like Bitcoin, Ethereum are being traded. All right, good. If you are following, let me know in the comment section. If you can hear me clearly and you are following, do let me know in the comment section. I'm interested. I want to know if you are following me. It's important that each and every person in this class can hear me audibly and also following me. Let me know if you are following in the comment section. Are you following? Are you following? Let me know in the comment section. That's very, very important. Let me know if you are following in the comment section. You can drop a reaction. You can drop following. Let me know if you are following in the comment section. Let me know if you are following in the comment section. Okay, it's Zoto said he's following. Okay. Who else is following? Who else is following? I want to know that you are following. I want to be sure that you are following. Awesome. Daramola said you are audible. Excellent. That's what I want to hear. I want to be sure that I'm audible and you're following. Great. So we've gotten an insight into what Forex is, right? Now, who is a Forex broker? Okay. Who is a Forex broker? All right. We now know that the Forex market is a global market, is decentralized, and money changes hand from one individual to another individual. Okay, now who is a forex broker? How is this space, this market being controlled, all right, or managed? Let me put it that way. So a forex broker is the link between a trader and the network of banks that have access to forex liquidity. So what we are basically doing in the forex market, the forex broker is like a bridge, okay, connecting the trader to the network of banks that have access to the forex liquidity. Okay, retail traders like you and I. Because on a normal note, we would have not been able to trade except you are billionaires. Okay? But with the help of forex brokers, they are able to connect, they are able to create that intermediary, linkage between the trader and the financial institutions. Okay? So that liquidity can flow from the retail point to the institutional level. A forex broker gives access to foreign exchange trading and provides support functions, all right, for you and I. Now, one of the top recommended brokers that we have currently is OctaFX. OctaFX offers varieties of opportunities, at low cost, okay, which is giving you the lowest spread you can ever find in the market, highly competitive spread that you can ever find in the market. Okay, there is high trade execution speed, and that is what you need. You don't want to place a trade and it's going to take like 10 seconds, 20 seconds, 50 seconds, 1 minute before your trade is being executed. Also, no deposit and withdrawal fee. What you deposit is what you will get. What you withdraw is what you will get. There is no that we are charging extra fee on deposit and extra fee on withdrawals. You can imagine that OctaFX is creating this for you, all right, to be able to have access to low spread, high trade execution with speed, no deposit and withdrawal fee, also local transfers, and promos and bonuses, just like the one we offered and we are offering at the end of this session. 100% bonus, doubling your deposit. As you deposit, you get double of it. OctaFX is our recommended broker. All right. Now, one interesting thing I would like you to see in the chart that we've provided is this. You can see that we have financial market participants. Who are the financial market participants? We have government, we have central bank, we have banks, we have corporations, we have institutional traders, we have retail traders, we have brokers, then we have the market makers. All right, the market makers. So let's have a little deep dive into practice in registration with broker, as well as opening a demo account. So as a newbie, here's what we're going to do. You go to your system, you put in OctaFX, all right, OctaFX.com, all right, you load it, it's loading. Now you are here, all right. Now what do you do? All right, so I'm going to use the name of two persons here, all right. I'm going to use Daramola, who has been active and responding, and I'm going to use Joy, who has also been active and responding. So we say Daramola, then the last name would be Joy. Okay, then you go straight to say using an email. Okay, you can use your email. Once you input your email, okay, say Daramola Joy at gmail.com, and you now come and put in your password and say, okay, let's use Dara Joy 982. So and then we click on confirm, all right, and then we click open an account. So when you click open an account, it tells you to complete your registration. Follow the link in the sent to you, all right, and you click on the link and complete your registration. Okay, so let's assume you've completed your registration, all right. So let's assume you've completed your registration, and let me use okay, coming. So let's do something real quick. Say you want to open an account. Okay, it's asking that. Okay, so maybe you want to open an account now. You now open your account. Let me Okay, you open your account now, and boom, say this is your account. Okay, and then you now go to open a new wallet. Okay, you go to open a new wallet, so you say create account. So when you come to create account, it gives you that you come here, you can come and set up your account here. All right, then you can use demo account. All right, let's set up a demo account. So we come, this is spread from 0.4. This is and the instruments traded here is 230 instruments. On MT4 spread is 0.6, and here the instrument traded here is 74. Of course, I'm interested in MT5, so let's go with MT5. You set your leverage here. You come here, you set your leverage, say 1:50, and then you come here to deposit $500, and you create your account. So yeah, your account has been created. Can you see that? Your account has been created. The important infos you need here is your account name. Okay, your account name, and likewise your what is it called, your password. Okay, so yeah, you go straight to trade. Since you've opened an account, you go straight to trade. You enter the password. Let's see if we've gotten an email that concerns us here. Okay, so you put in that password, say so you can see your account is here already. So that's practical way to set up your account, right? Then you can start trading from here. All right, you can start trading from here. All right, so we've successfully set up our trading account. All right, and we've registered with OctaFX. Okay, so that is how to register with OctaFX and how to set up your trading account. All right, good. So having done that now, you set up your trading account. You've chosen your MT4 or MT5. You download your MetaTrader. You can download MetaTrader 5. You download MetaTrader 4 based on the account type that you opened, and then you sign in. Okay, downloading MetaTrader, you can come here. All right, you can come to here. You can just go back to your personal account. Yes, so you can come and download here. You can see trade in app, download MT4, download MT5. So on your Android or your desktop. So why traders trade the major pairs? Why do traders trade the major pairs? So the major pairs on the Forex market is the 5 top pairs that are USD pairs. Alright. Now we have Euro USD, we have USD, we have USD CHF. Alright. They have large volume. That's why their spread are smaller. Okay. Euro USD is the most heavily traded currency in the world. The list of the most traded currency pairs can be extended by the commodity pairs. Alright, that's USD CAD, Australian USD, New Zealand USD. Okay. Okay, so you can see Euro is the largest traded. So when you look at every currency pair, the currency pair is a quote of two different currencies. All right, a quote of two different currencies with the value of one currency being quoted against the other. Currency pairs, we have the base currency and the quote currency. The base currency is the basis for the transaction. All right, is the one that we are using to carry out that transaction, is the basis for the transaction. So that is the first currency in the pair. So when we say Euro USD, Euro is the base currency, is the basis for the transaction. Quote currency is the second currency in the currency pair. It is also called counter currency. Okay. Now, the bid price attached to the currency pair tells you the amount of quotes or the amount of quote currency you will need to buy the base currency. I will explain further in our next slide. So if you look at the quote price now, the price that is shown on the quote price is telling you how much of the quote price you will need to buy the base price, to buy one of the base price. The base currency is always greater than the quote currency. Okay, the base currency is always greater than the quote currency. Now, so look at this. This is an example. So when you see Euro USD, Euro is the base currency, USD is the quote currency. Australian dollar, Japanese yen. Australian dollar is the base currency. Japanese yen is the quote currency. Now you see this price that's always in front of the currency pair is telling us how much of Japanese yen you will need, how many Japanese yen you will need to get one of the Australian USD. How many Japanese yen would you need to get one of the Australian USD? You will need 83.555 Japanese yen to get one USD. Facts only. You will need 83.555 Japanese yen to get one USD. So the base currency, which is the basis for the transaction, all right, is the quote currency is used to the figure in the quote currency is used to know how much we can use to get one of the base currency. Interesting. Now we have abbreviations. Okay, you need to understand these abbreviations. So when we say EUR is euro, USD is dollars, NZD is New Zealand dollars, AUD is Australian dollars, GBP is Great British Pounds, CAD is Canadian dollar, CHF is Swiss franc, JPY is Japanese yen, ZAR is South African rand. Currencies are paired. All right. We have Euro USD, we have USD JPY, we have GBP USD, we have GBP JPY, we have AUD USD, we have USD CAD, we have NZD USD, and a lot more. So practice adding the chart of the currency pair. So here is it now. Let's add the chart to this currency pair. So let's add, so you can see it now, see several currency pairs here, right? Market watch, these are several currency pairs. So let's add to this, okay, let's add USD. So if you want to add now, you come here, look at this window. You come here, you click on it, it gives you a drop down of or every other currencies that you might be interested in. So you get, so this is the icon that shows, if you come here now, view, you tap it, it is market watch. You can always add to it here. Okay, so this is the market. So you come here, you add to it. Let's say you want to add GBP USD. All right, you can see it loads it immediately. You are adding it to the chart, it loads it. All right, it gets to load it into the chart. So that is how to get the charts of a currency pair loaded. All right, you pick it from here, you can pick it anywhere, you can double click it here, you can double click it here, you know, you can come here to pick USD JPY, you can come here to pick Australian USD, you know, you can come here to pick New Zealand USD. Everything is there, right? Everything is there. Okay, so that's how to load these currencies. So bid and ask price. Bid and ask price. One interesting thing about bid and ask price is that the bid represents the price at which the forex broker is willing to buy from you. The bid price represents the price at which the forex broker is willing to buy from you. All right, the base currency in the exchange for the quote currency. Now, the bid price is that price that the trader is willing to sell. All right, the bid price is that price that the trader is willing to sell, and the ask price is that price that the trader is willing to buy. Okay, the ask price represents the price at which the forex broker is willing to sell, okay, to you, while the bid price represents the price at which the forex broker is willing to buy. All right, so when you see a bid price, that's the price that the forex broker is willing to buy, and when the forex broker is willing to sell, which means there must be somebody. When the forex broker is willing to buy, there must be somebody willing to sell. All right, that's the bid price. So the forex broker is bidding. He wants to buy a currency from you. You as the trader, you are selling it at the particular price, which is the bid price that the forex broker is willing to buy from you. So the ask price is the price at which the forex broker is willing to sell. But you now, you are willing to buy at that ask price. You as a trader, you are willing to buy at that ask price. So you look at this is what you will see on your laptop when you are about to trade. When you click on sell, you have to decide, are you selling, are you selling or you are buying? And when you look at this chart, you always see a line, two lines of different colors. All right, the ask price is the blue one, and the bid price is the red one. The ask price is the price that the broker is willing to sell. Okay, the ask price is the price that the broker is willing to sell. The bid price is the price that the broker is willing to buy. So when the broker is willing to buy, which means you as a trader, you are willing to sell. Okay, the ask price is that price whereby you as a trader, you are willing to buy, the broker is willing to sell. The bid price is that price whereby you as a trader, you are willing to sell and the broker is willing to buy. All right, good. So the difference between the ask price and the bid price is what we call spread. Okay, the difference between the ask price and the bid price is called spread. Now, when we talk about spread, I've said it like spread is the difference between the bid price, okay, the sell price, and the ask price, which is the buy price of an instrument. Okay, so let's use it on the average where we have $1 being 600 naira here. So yeah, this person is willing to buy the dollar for 600 naira, while this person is willing to sell the dollar for 615. So which means the spread, which is the difference, is 15 naira. All right, 15 naira. That's the spread, the difference. Now, lot size. Lot size is the price, is the amount or quantity of a trade that you as a trader buys or sells. It's sometimes called position size or trade size. Now, most important, you need to understand that there are different types of lot size. So we have the standard lot size, we have the mini lot size, we have the micro mini lot size. Okay, we have the standard lot size, we have the mini lot size, and we have the micro mini lot size. Okay, now when you talk about the standard lot size, we have 100,000 units in a standard lot size. 100,000 units in a standard lot size. Now, having 100,000 units in a standard lot size, it represents one lot. So when you are trading and you choose one lot size as your lot size, okay, it means that you are trading with what? 100,000 units. Now, the value of a lot size, one lot size of a standard lot size is $10. That's the value of a standard lot size, $10. Okay, $10 is the value of a standard lot size. So it means that if you pick a trade using a standard lot size, one move, one pip, we call it pip, all right, one value per pip is $10. So if you use a standard lot size and you enter a trade, when you get 2 pips, that's $20. 3 pips, that's $30. If it goes against you, you lose at equivalent amount as you will gain if it goes in your favor. Okay, mini lot size. The unit of a mini lot size is 10,000 units. Representation of that is in 0.1 lot size. 0.1 lot size. And 0.1 lot size, that is $1 per value per the value per pip. All right, so if you enter a trade with mini lot size and the market goes one step further per pip, you would make, goes in your favor, you would make $1 per pip. If it goes against you, you would lose $1 per pip. So when we also look at micro lot size is on 1,000 units. 1000 units is 0.01. Okay, 0.01, trading with 0.01 now is telling us that what one value per pip would be 0.1 dollar. That's 10 cents. So if the market goes in your favor and you are 100 pip into the market, that 100 pip into the market means 100 times 0.1. That means you get $10 if the market moves 100 pips in your favor. And if it moves 100 pip against you, you would lose $10. Equivalent. So this lot size is very important, and it's always stressed when talking about risk management. Okay, because risk management is highly important. Okay, highly important. Now, we've talked about pip. Like I said, the market moves. When the market move, if you're using a standard lot size, one pip value is $10. If you're using a mini lot size, one pip value is $1. If you are using a micro lot size, one pip value is 0.1 cent. Now, the question is, what is a pip? All right, what is a pip? So a pip, which is known as percentage in point or price in interest point, represents a measure of change or movement in a currency price, in a currency pair. So when a price moves, the pip is a measure of the change that occur on a price movement. Okay, a point is 1/10 of a pip. So you say 1 pip is equals to 10 points. Do you catch that? 1 pip is equals to 10 points. So 20 pip is equals to 200 points. All right, but typical currency pairs excluding JPY, which is Japanese yen, are Euro USD, the Pound USD, the New Zealand Canadian dollar, and the USD Swiss franc. The Japanese yen pair associated with JPY, e.g. GBP JPY, USD JPY, Australian dollar JPY, and also metal, which is the gold, silver, and the likes. Here we calculate pip and points. Okay, like I said, how to calculate pip and point. Now you say you are calculating from the 4th digit after the decimal point, which is 0.001. So for example, Euro CAD is trading at 1.4701. Don't forget, we said CAD is the quote currency, Euro is the base currency, which means that this is the amount of CAD we will need to buy 1 euro. So if Euro CAD increases by 10 pip in value, it means that 1.4705 plus 0.0010. So because the 10 pip increment will start counting from the 4th digit. All right, so it will now be 0.0010. That will be equal to 1.4715. Same thing applies to the decrease. If it decreases from if it decreases by 10 pip, that's 1.4705 minus 0.0010. So we will be getting 1.4695. All right, yeah, that's what we'll be getting. So for JPY pairs now, you can start calculating from the 2nd digit after the decimal point, which is 0.01. So which means that if GBP JPY increases by 10 pips, we'll start counting from 153.22, that's plus 0.10, that will be 153.3. Okay, and if there is a decrease as well, say there is a decrease in GBP JPY by 10, that will be the current price will be subtracted by 10, and this is what we'll have. All right, don't forget we are starting from the second digit after the decimal, so it is this 2.0 that will be adding the 1.02 and the 0.102. It is from this also we'll be subtracting the 0.10, the last two digits after the decimal point. Now for metals, you start calculating from the first digit after the decimal point, because if you look at it now, you from here now you start calculating from 5. All right, the first digit after the decimal point, 1775.9. so if there is a 10 pip increase in the value of gold USD, we'll be having the current price, which is 1775.9 plus 0.10, all right, which is now equals to 1776.9. okay, same thing goes with any decrease in the value. All right, same thing goes with any decrease in the value. So I need your response in the comment section, because I want to be sure that you guys are following. At what point do we start calculating the number of pip on Euro USD pair? At what point? At what point do we start calculating the number of pip on Euro USD pair? Let me know in the comment section. I'm waiting. At what point? At what point? I'm waiting to see more comments. I'm yet to see comments coming in. I'm yet to see comments coming in. I'm yet to see comments coming in. Okay, Joshua said at the fourth point. Perfect, that's excellent. At the fourth point, we start counting at the fourth point. So from here, that's where the value starts counting. All right, at the fourth point from here. So if we have 1.4705, the pip value start counting from this fourth point. All right, from 5. So if we are adding 10 to this, that would be 5, 6, 7, 8, 9, 10. Then the value comes here, then that's 15. Okay, so that would be, if you're adding 10 to this, that would be 1.4715. all right, okay, another question is this: for if we are trading Euro JPY, where do we start calculating our pip value from? Where do we start calculating our pip value from on Euro JPY? Where do we start calculating our pip value from on Euro JPY? When do we start calculating our pip value from on Euro JPY? where do we start calculating our value from Euro JPY? Second digit. Joy said second digit. That's excellent. I'm glad you are following. So, yes, in the beginning of this session, we talked about promo code that will help you double your deposit. Now, here we are, and this is our promo code. Tunmise WX. TUNMISE Use this, my personal promo code, until 15th of June to double your deposit. It can only be used once. This is my personal promo code for everyone watching this session, until 15th of June to double your deposit. It can only be used once. It can only be used once. Here is the promo code. Write it down. Double your deposit from now till 15. It can only be used once. It can only be used once. This is an opportunity for you to double your deposit, have more leverage to trade, have more bandwidth, have more abilities to endure drawdowns when you double your deposit. All right? So, the promo code goes TUNMISEWS. All right? Here's the promo code on the screen. Write it out, use it, double your deposit. So, yes, let's do a quick test. All right, let's do a quick test. I've been asking questions as well as we've been going, because I like having an interactive class. All right. So, at what price are buy trades executed in the forex market? At what price are buy trade executed in the forex market? Or let me ask the first question that says, what is the total amount traded in the global financial market daily? I want to know who is the first person who is following. What is the total amount traded in the global forex market daily? I want to know who has been following. I want to know who has been following and who have not been following. I want to know who has been following and who have not been following. Someone said 7 trillion. That was close. Who have been following? What is the total amount traded in the global forex market daily? We are giving you certificate for this, so we need you to be up on your game. Yes, someone finally got it. 7.5 trillion dollars being traded daily in the market. All right, in the market. Now, which currency pair has the highest, is the most traded in the forex market? Which currency pair is the most traded? Which currency pair is the most traded? Which currency pair is the most traded? Who can get it so we move forward? Yes, I'm waiting. Which currency pair is the most traded? Yes. Euro USD. Awesome. Euro USD is the most traded currency pairs. So I want to open the floor to 2 questions from the audience. If you have any question, do well to ask a question in the comment section and I would do well to answer you. If you have any question, ask your question. If you have any question, ask your question. Any question. This session is for questions and answers. If you have any question, ask. Okay. So yes, what is next on our webinar session? What is next? Advantages of the forex market. Advantages of the forex market. We have advantages of the forex market, trading sessions, when to trade forex terminologies, leverages. We have take profit and we have stop loss. All right, that is what is next in our sessions. Okay. Yes, someone is asking what is the difference between MT4 and MT5. Yes, so you like I said, when we were opening the account, you can see that MT4 had limited number of instruments, MT5 had more instruments, over 200 instruments. MT4 had 70 something instruments, right? So it just depends on, MT5 gives you access to more asset class like stocks, all right? Makes you to trade stocks, all right? But MT4 does not give you that leverage. Sure you get. So if you are somebody who wants to trade stock, MT5 is your best bet, all right? Either of the two works perfect. Just depends on which assets you want to trade, all right? How do one know when to profit from the trade? Yes, that is why we are looking at in our next session. Take profit and stop loss. When to trade forex, that is very important. So you should be here in our next session so that you can get the best. All right, you can get the best. How do you avoid liquidity with? Okay, you have to. That's why we talk about lot size. You have to be mindful of your lot size. You don't want to be using a standard lot size on a $50 account. Neither you want to be using a mini a micro lot size on a $50 account, all right, or a mini lot size on a $50 account, all right. Your lot size that you should stick with should be the lowest. That's 0.01. Okay, so that is how you can avoid blowing up your account, as well as stop loss should be your friend. In our next session, we'll be talking about taking profit and using stop loss. Which broker to register with? Yes, OctaFX. You go to OctaFX, you sign up, you use the promo code. When depositing, you get double of your deposit. All right, double of your deposit. Thank you very much for joining us on this session. We appreciate that you have joined us. You joined us on this journey to learn more, which is very important. And I want to advise that you should be here in our next session next week, same day, same time. All right, we have a lot of value packed content to give to you, knowledge filled contents to give to you. All right, in our next session, we will be talking about advantages of forex trading sessions, when to trade forex, terminologies in forex, leverage in forex, and also take profit and stop loss. When you join us in that next session, you will get to know when to trade, when to buy, when to sell, how to take profit, how to prevent losses. See you in our next session next week. Bye guys.